See you soon.
All right, let us switch over to Mr. David Morgan. And let me just double check the sound that we don't have an echo coming in. I think it looks good. David, welcome on the program. Thanks for being available on such short notice, but we felt it was urgent to do it. And your name has been dropped a zillion times, so we're excited to have you on.
Well, thank you.
So a lot has happened, and maybe you help us understand it. And
I think if you don't mind, Kai, I'll just jump in a little bit. Everything Chris said was pretty accurate, but I want to just kind of set the record here. The rule of thumb of the paper ratio to physical is usually around 100 to 1 minimum. It's been as high as 400 plus. However, in the last several months, it's dropped down substantially, which indicates to my thinking that the leverage boys are not willing to put on the type of leverage that they were in the past. The other part of Chris that's very accurate and doesn't get talked about hardly ever is we only know what's transparent on the futures exchange. What we don't know is what is the over-the-counter derivative market doing, which is far bigger than the transparent market. So the way he kind of smirked, I remember him asking me that question, or at least my memory was we were riding in his car out of New Orleans, I think, when we discussed this. But so I want to make sure that, to set the record straight where we are right now. And so just let me give it back to Trevor and Kai and see what kind of questions you've got.
I was wondering, one of my questions is so it's been a few days since we've seen the last commitment of traders report on the precious metals. And I'm just kind of curious, is that something you look at every week? And if that comes out later this afternoon, I mean, do you think that's really going to show really how dynamic this market was?
It won't, because it only goes through Tuesday. Okay. So we'll have to wait till a week after that to really see what's going on. But I do pay attention to it, not as much as I used to when it was way back when there wasn't an ETF. Prior to the SLV, you could almost trade weekly basis the COT. It was that much good information, and the timing was pretty associated with the report. That hasn't been true ever since the advent of the SLV onward, which is a lot more silver ETFs than just the SLV now, as you're well aware. So yeah, it's still important. The last time I looked was about 2-3 weeks ago before I left the States, and it was neutral, meaning there were just about as many, it was about as bullish as it was bearish, the way I interpret it. There is a little bit of art to it, but it's pretty easy to determine when you're getting near the top and it's ready to fall in paper price, because the shorts have infinite money and the longs don't. So when you're betting at a poker table against somebody at table stakes and they have infinite chips and you've only got $1 million, the odds are highly favorable to the player that's got infinity to play with is going to beat the person that's got a measly $1 million.
There's no risk at the table, right? So fantastic. David, I was just checking out SLV. I was looking at the share price of First Majestic as well, and Hecla, because we had Phil Baker on, and it seems like we're running a bit out of steam here, right? What is happening? Like, is the and I asked that before. Like, what is your opinion? Like, is this movement that we're seeing? Like, I love all the eyeballs on it, but is it strong enough to catapult us to that next level?
Doesn't look like it. I got excited yesterday. I mean, look, if you look at the last 3 days of trading, on the 27th, we had a flat market that was around 25.50, which is it's an okay price, I'll call it. But certainly silver can be a lot higher. And I like what Chris said about, who knows what the correct price is, because we don't have a free market. So yesterday, this thing with the GameStop Reddit folks, et cetera, just started hitting everybody. I was getting flooded with TMI, too much information, and it took off. And we went from around the 25.50 level in New York on the open all the way up, almost hit 27. And then it started to sell off, which means that the short sellers, the professionals, were taking it down. And it closed at about 26.50. So we're up about $1 on the day. It held through the aftermarket or the Globex. And then we opened up in New York, and we got all the way up to about 27.50, and we traded for a little more than an hour. And now it's back down to, I don't know, as we're doing the interview, it looks like about 27. We need to get over 27, and we need to stay there before I get bullish on a short-term basis. I'm bullish long-term, almost a perma bull. And And that's how I see it. I don't see enough momentum, but I did a little bit of arithmetic, and I looked at the warehouses, and what I determined was that there's about $4.5 billion worth of metal that the registered category has. So that's really all these guys have to play with. Now, of course, they, as we already said, hypothecate it 10 times, 20 times, 25 times, 100 times, whatever. It varies. But the real physical metal is about $4.5 billion. So if 1,000 people put in $5 million to take care of business. Now, not that the price going up wouldn't cause people that hold it now to sell into the market, but I'm just going to discount that and do a thought experiment that everybody holds their position. There's buyers only. So 10,000 people at $500,000 would corner the market. 100,000 people with 45,000 would corner the market. But here's the interesting one: 1,000,000 people at 4,500 will round up to 5,000 would corner the market. And I think in a nation state of whatever the U.S. is, 330 million people, there's probably 1,000,000 that could be savvy to the silver market. But that's just the U.S., which is 4 or 5% of the world's population. So they could easily see 1,000,000 people putting 5,000 U.S. equivalent into the silver market would take care of the entire registered category on the COMEX. And then it's, in theory, game over. Now, of course, a market's a market. Not everyone's going to hold as the price goes up. But silver's interesting. It always moves more when you start hitting new highs. And I think that's how most of the algorithms go. And I think someone mentioned that earlier. I think it was Trevor, that once you get to a certain level, you actually have less risk buying high because for a while, because there are no sellers. Everyone that sees that silver's at, $55 and it's never been there before nominally, it's I'm not selling. Why would I sell? Maybe it's going to 75. So any little bit of new buying drives it up to 75. And I'm not selling. It's probably going 100. Maybe that David Morgan isn't a crackpot. And all of a sudden, a little bit more buying comes in. So you see where I'm going with this. Now, it's not just true of silver. It's true of any market. But it's especially true of silver, especially because anyone, of course, I am biased as all get out. I've devoted so many hours of my life to studying the silver market. So bear that in mind. Nonetheless, there is something to be said that silver has a unique place in not only monetary history, but the technological age. I mean, it's the most important commodity known to man outside of oil. Without oil, the world stops, basically. But without silver, it also stops. So, and there's other things that are important. I know food, water. I mean, I'm not trying to be one way about it. I'm looking at it from an investment or a monetary perspective. So let me give it back to you and Trevor.
Yeah. David, I just, that napkin math you just did was quite fascinating, actually. So thank you for that. But I just keep on thinking, I think Wallstreetbets had now has 4 or 5 million?
6.1 this morning. So yeah.
6.1 million followers globally. I mean, so what you're stating,
Yeah. I mean, sorry to interrupt. It gets me excited because let's say that 5 million of them, they would only have to put in about $2,000. Game over. Game over. If the game stops, stop the game. Let's stop the game. You follow my drift?
Yeah. Well, and it's like based on your examples you made with silver just going higher, nobody's selling. Well, look at what happened to Tesla. Nobody was willing to sell that stock because it was just getting momentum. And there's really a very simple analogy, right? And of course, there are other factors at play. And I've seen actually the major markets come down a little bit. I think the Dow Jones went down from over 31,000 to closer to 30 right now. Do you see maybe some risk aversion or people taking money out of the main markets? Is that what we're seeing right now? The Reddit crowd, and are people getting more conscious about the main markets now?
Well, I think the overall shift is going to take place this year, and it's going to be from things we want to things we need. I mean, the food, category I've been, I would say complaining. I've been talking about for quite some time about the food supply problem and food disruptions, and also kind of a slant on, meat bad, non-meat good. And there's a lot of factors, but the main point being that the foods prices are going higher, higher, and higher still. That's number one. Most people look at that as inflation, although it's going to be perceived as inflation, but really it's going to be more of a supply shortage, which means no one's going to stop and consider what. Most people are just going to say, "Uh-oh, it costs me more to eat. I think I better buy more food." And anyone that has savings is going to say, "Hey, I might want to store my wealth in gold or silver." And the spillover into silver will be unbelievable this time, in my strong, studied opinion. And the reason being that once the institutions run to gold, when the pension funds go, "Oh no, there's only one thing we can do. We got to put 5% in the gold market." "Oh no, let's do 10%. So when you've got all the IRAs, all the pension funds, and all the Wall Street money that's looking for the next hot thing, and the dollar destruction continues even further, because heck, we could only print up 30% in a year more than we had and not have any repercussions. Are you kidding me? How far do you go? You go to the tipping point. You go to the crack of boom that Mises talked about so many years ago, where people finally wake up and smell the coffee and say, "You know what? I don't trust the dollar anymore." And when that's hit, and it's already hit, but not at the level where it's going to really move the gold market. But once it happens, you can't turn it back. It's a psychological event. It's not a monetary event. It's not based on how much they print. It's based on how much faith and trust there is in the system. And when enough faith and trust break down to the point where people say, "I'd rather buy 10 cans of tuna than hold on to these dollar bills," that's the problem.
Kai and David, I know Chris is still on, and I know Chris has actually got a follow-up question for David. Is there a way to get Chris back on here?
We'll probably completely destroy the design here. Let me get him on in a second. No, we can't. Okay. Like it's not on the live stream. I can hear you, Chris, but we can't hear you on the live stream.
Skype, I can read it.
So,
all right. So Chris wants to know if you can discuss what would be.
Yeah, Chris, we can hear you, but the stream cannot hear you.
Yeah. So here, so Chris just texted me. He's like, what would be the best way for Reddit to actually force the squeeze?
It's always been the same story, Chris, and you know the answer. I think you just want verification. The only way to squeeze them is to get a hold of this. The thing that's beautiful is I don't know the demographics of the Reddit crowd. Obviously, they're smart, and obviously they understand how rigged the system is. So, you don't need a brokerage account. You don't really need a third party in the metals world, which is beautiful. You just basically call up a dealer and you can, over the phone, order the product. And so you lock in your silver price at $27.50. There's a premium on the coin. You send them a wire, a check, a credit card, whatever they accept. 2-3 weeks later, you get it in your mailbox or delivered by UPS or FedEx. And that's the end of the story. So that's what's going to do it. That's why I use the analogy I use with the napkin math. There's only 150 million ounces sitting with the dealers. Again, that's a fact. That the part that was a presupposition, a fantasy maybe, I doubt it's a fantasy, is would there be much selling as the price moves up and up and up? The answer is we don't know. We certainly know that the professionals would probably sell into it because, after all, it's just a bunch of Reddit folks. What do they know? Until all of a sudden the supply starts being drained off. And now they're in a position where not 25, or, they shorted more at 30 and 32 and 33 and 38. Now they got a really big short position that they really they're having trouble managing. I mean, that could happen with the Hunt brothers. The Hunts bought a lot of silver a lot lower than the prices where the exchange started to get in trouble. But the main short was a member of the exchange. So they basically broke the rules. Now you'll say, "Oh, well, no, there'll be people that will defend that." But I happen to know who the fund manager for the Hunt brothers is. I'll consider him a friend. I've met him a few times face to face, personal, up close, talked to him directly. And he says, and I agree, they changed the rules. They said you can only sell. Well, how rare? Isn't that what just happened on this GameStop? You can only sell. Yeah. So these people work from a criminal perspective and pat themselves on the back for being regulated. What are they regulating? They're regulating their own pocketbooks. That's what they're regulating.
Yeah. And by the way, let me jump in,
David.
Trevor, just a quick public service announcement. We brought Chris back on the screen. I sacrificed the whole design of our live stream here, but Chris, you're back live with us. We can all hear you. So, and So it's
thank you.
great to have you back on, and maybe I'm not sure. And just a quick second, not sure what everybody's cutoff time is, but I know we have a lot of viewers, and maybe we can jump to a couple questions after a couple more for David and Chris here.
I have only a few more minutes. I have an appointment here with Roskin Gold actually in 7 minutes that I need to jump on. Shameless plug. But I do want to just probably leave you open-ended for both David and Chris and even Kai about the significance of this moment in history when it comes to the financial history of the global markets. And I don't think you can downplay really the significance of what's happening and how this is like almost like a grassroots move to democratize enforce transparency in markets that have just been lining their own pockets for such a long time. There is a real, I think we'll look back in this in maybe in the years to come and realize this was maybe a moment in change. Do you think this could be it?
I'll take it. Yeah, I think it could be. I think you outlined it pretty well. I mean, I could go even further. I'm pretty amped up today, as you could probably tell. I mean, basically, the way I see it, my opinion, is that there is a one world religion. It's called money. It doesn't matter what part of the world you're in, money is your God. And that's true. Now, most people won't admit it, but it is the truth. And the power elite, the banking elite that control the money system, have all the power. That's our quote unquote God, small g, I'll say. But the point is that if the people realize that the power is in their vote, in other words, you've heard it over and over, Trevor, Kai, Chris, if you really want to make a change and get rid of this certain detergent that's harmful to your clothing, gives you a rash, quit buying it. And you know what? If everybody quits buying X brand of detergent, they're out of business. Well, really, the same thing plays here. If you are saying, I got all this digital money sitting in my bank account and I don't trust it anymore. I don't trust the banks. I don't trust the system. It's obvious what they're doing to these Reddit people. I want out. The easiest thing to do is make a phone call to a coin dealer and make a real money purchase. Think about it. When my dad started, when I was a kid, 5-year-old, my dad made $6,000 a year. We had one car, but my mom didn't work. And $6,000, if people don't know, a dollar is about 0.77 77% of an ounce. It's not 1 ounce, even though the current dollar is 1 ounce, because the Treasury doesn't know what a dollar is anyway. And that's the truth. I just proved it. So $6,000 was about 5,000 ounces. So one contract a year put a middle-class American man in good stead, no real financial worries, paid all the bills, was able to save, able to add on to the house, keep everybody, entertained, happy, healthy, and everything else. So you might consider that, what's a 5,000 ounces of silver going to do for you 10 years out or 20 years out, depending on your age? And the answer is, I think it'll be significant, but I've thought that way for a long time. But it'd be interesting to see a free market. So I probably overtalked it, but believe me, I'm not seeing the data I'd like to, that I'd say we're there and we're really going to go. But that doesn't mean it won't. I still believe, regardless of Reddit, it would go. But as you said, and I have to give credit here, Jim Paplava wrote the article, Silver Looking for a Catalyst. And you know what? We might get a synergistic catalyst. The Reddit might just be lighting the Atlas engines that start the rocket ship going. And then all those people that have been conservative and listen to people like me and others, obviously lots of others, and said, you know what, that kind of makes sense. He isn't telling me to put my life savings in silver. He's saying put 5%, 10% in there. And I don't trust the banks, and I don't trust Wall Street. And I've never bought a stock in my life, and I don't want to buy a stock. But I know what that coin is. That's the real money. Real money. I used to end my little videos with, get real, buy real, be real. It's maybe time to reassert that. Get real, be real, buy real. We're living in a fake world. Everything is fake. That's what Robert Kiyosaki's new book is, right? Fake. He's right on. Robert is correct.
David needs the sword. I wish you were.
I love how riled up he is, and that's actually true. Because I did an interview with Robert Keynes, and everybody knows Robert Keynes as well. The other day, where I walked into the interview at 10 a.m. I was like, Robert, what are we doing? Are we masochistic staying in the gold silver sector investing? Like, what's happening? It's been very, very terrible. And then 6 hours later, I'm sitting in my chair clapping like a little kid, super excited about what is going on, right? So we've seen a massive shift there. So I just hope some of the eyeballs stick. And Chris, I got a question for you, because you've done an interview with Robert, and it came to mind just now. And you looked at the overall silver coins. I think it was you who talked with Robert. I might be wrong. But Robert looked at the silver coins, and you could see the demand of silver coins. I think I don't know the time frame, it was 3.8 million. I think it was last month, right? What is there a lag in physical demand showing up on the buy side, or is that immediate? Like, do you know what I'm getting at? Like, I want to know, where can I see physical demand for like the Silver Eagle picking up, and B, like, is there a lag from physical demand to price?
Yeah, I think you're asking me. Yeah, there's a tightness in the market right now. Maybe you're asking Chris. Chris, I'll hand it over to you.
Chris is on as well. Yeah, so both of you could answer. Like, is this more a general question? Because I want to track it, right? Like, I want to see how real this is, because I've seen so many photos on Twitter of people posting photos of their physical bullion order, like of silver coins, right? So I want to see if there's a blip.
I before you get started, I really have to jump. I'm really sorry.
Okay, Trevor, we're going to wrap this up in 1 second. And like, Chris, okay, if you could answer, and then we're done. Because
yeah, the short answer, I mean, people can email Arcadia at Miles Franklin if they, even just want to find out what premiums are doing. I also bring on Andy Scheckman, who owns Miles Franklin, every Saturday night. It'll be on there tomorrow night, provides an update of the physical market. Is there a lag? I mean, I guess you could say that. I mean, it might be like a 10-year lag, unfortunately. I mean, basically, what you're seeing in the paper market, or the price on the COMEX, generally has very little to do with what's happening in the physical market. Is it conceivable that we are nearing the point where those two forces revisit each other? It's possible. To be clear, there's not enough, at least that I'm seeing, to say that definitively. But, you keep throwing enough darts at the board, you eventually hit something. And, part of the fun, just like David and everybody else said, if you just own your physical silver, then it doesn't matter whether it's this week or next month or next year. And before Trevor explodes over there, I'll wrap up and say thanks again for having
Trevor,
me.
Trevor, it was your idea. It was a fantastic idea. I got to host, fortunately. Thanks for joining us, Trevor. Follow everybody. Mining Stock Daily. He hosts a daily podcast on gold, silver, junior mining stocks. Follow him. He's doing an interview with a gold junior in a minute. So join his channel. He's on all of the podcasting platforms. David Morgan, the Silver Guru, the Morgan Report. Really, really appreciate you joining us on short notice. And of course, Chris Marcus, Arcadia Economics, runs a fantastic YouTube channel at Arcadia Economics. And he's on Twitter as well, Arcadia Economics. So really appreciate everybody. I'm speaking very fast because I know everybody has to go. And everybody else, have a great weekend and enjoy the ride.
Thanks, Kai. Thanks, David.